Hey guys, Akil Stokes here with Tier1Trading.com and welcome back to another one of my weekend videos. If you guys are brand new, this is a video I put up on YouTube each and every weekend, sharing with you some valuable tips on how to become a consistently profitable trader and showing you some of the best trading ideas that are on my radar for the week to come. I literally just got off the road, hopped into this chair, hit the record button because I had an idea on my mind and I wanted to share it with you while it was still fresh. And it really stems from a post I did the other day where I got into a little bit of an argument with a trader about, in order to be a successful trader, do you have to be 100% automated or is there room for discretion? Basically, the idea started with saying, hey, trading is both an art and a science. And he was like, no, it's not. It can only be a science and blah, 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 blah. It was a short argument because the guy was very fixed-minded. He wasn't open to listening to other opinions, even when the great Adam Grimes chimed in. And it's just not worth arguing with those type of people. But I did think it was a cool subject to share with you guys because many of you guys are new. Many of you guys don't have the experience in the market to really know whether it is an art, whether it is a science, whether it is both. I know when I first came into trading, I thought that there was a single way of trading. I had to do this one super secret thing. And if I didn't do it this way, then there was no way I can be successful. And unfortunately, there are a lot of people out there that still kind of preach that message. And one of the biggest books that helped me with that message was Jack Schwager's Market Wizards, right? Market Wizards, the first edition. Matter of fact, I just got, right over here. I just got the new one in as I'm starting to get my book collection ready for the little six week hiatus I take during the winter to work on myself. But the first one was a really good one because it was an interview with the best traders of all time. And something that I picked up is that one, they were all bad, which was very helpful for me at the time because I was horrible. So I kind of felt like, hey, maybe there is a chance this guy can make it. But it also showed me that there wasn't kind of a set way you had to do things, right? There were different traders that took different methods and they all became successful. And that was very, it was needed for me at the time to kind of get that inspiration and encouragement. And let's talk a little bit about art and science and kind of what they are. So to put things in the briefest way possible, when we talk about trading being an art, we can talk about discretionary trading. So you're actually looking at the chart, looking at candlesticks, and you're making decisions and you're using your eyes to help with your analysis. The science part would be more towards like systems trading, automated trading, maybe even indicator-based trading where it's really black or white. There's no room for interpretation. It either is or it isn't. And the truth is, like many things out there, you could be successful doing both. You could be successful in the middle as well, right? You can be very successful with a fully automated system where all of your thinking is taken out of the equation. You just do whatever it tells you. You can be very successful as a discretionary trader where you're relying on your skill of analysis, whether it's volume price analysis or pattern recognition to find high probability trading opportunities. You can also be somewhere in the middle as well. And that's typically where we fall with Tier 1 trading. We do have systems for both. We have automated systems, we have or systems trades, we have discretionary stuff. But my belief was always to, and this is based off my personality. Again, you don't have to be this way. It's based off my personality, was that if you're going to be a discretionary trader, be as rules-based as possible, meaning that you have a full set of rules. They're black or white. They're ones and zeros. If this, then that. If this, then that. It's not just the wild, wild west, but there is a little bit of room for interpretation within that rules, such as pattern recognition, high and tight flags, triangles, double tops, double bottoms. Because one of the problems that I see with full automation or having zero room for discretion or zero subjectivity, and again, this is going to determine, depend on your personality, I should say, is that there is a kind of a struggle when you disagree with your system. And I used to trade a system. It was a simple system. It was black or white. It gave me a green arrow when it was time to buy, a red arrow when it was time to sell. And I thought it was going to be my get rich quick way to, billion-dollar trader status or something like that. There was one problem, however. I didn't necessarily agree with the system. So every once in a while, it would give me a signal and I would look at it and be like, well, no way I would sell there. Like, that's stupid. We're right at a previous level of support. Like, why would I sell at that level of support? But because I'm trying to be a disciplined rules-based trader, I had to take the trade. And sometimes it won, but when it lost, I would second guess myself. I would, mumble, "Oh, I knew I shouldn't have taken it. I knew it was a stupid trade, stupid system." And then you could imagine the next time it gave me that same signal, it will, I would be a little bit hesitant. I wouldn't be, it was harder for me to take it. And those little cracks in the armor of trading psychology are what ultimately kill traders, because now you go from a system where you're supposed to be trading it and following it every single time to now picking and choosing which ones you trade, and you're not really being a system or a scientific based trader anymore. Your discretion is in there, but not discretion in a good way, emotional discretion. And then the same thing with the art way, right? We talk about forming our discretion around a blanket of very strict rules. Many newer traders out there don't believe in rules. I can't tell you how many traders I spoke to on a regular basis that I ask, okay, so what are your rules, to figure out if it's a good or a bad trade? And they're like, felt good. Right? So you get a lot of traders that hop straight into, oh, I've got intuition. I can just see it. I have a feel. And that's stupid. You're going to lose money so quick. So there are pros and cons of both. And I'm not here to tell you that one is better than the other. It's going to depend on your personality. But as a newer trader, maybe if you're a struggling trader, something you need to do is really understand what your personality is. Are you someone that needs to be all the way on the science side? Are you someone that needs to lean more towards the art side? Are you someone that needs to be somewhere in the middle? And once you kind of understand what your personality is closest to, now you can start developing your system around that. And that's ultimately how you find a system that fits your personality. And when you have a system or strategy that fits your personality, you're more likely to avoid those psychological mistakes. And if you're more likely to avoid those psychological mistakes, you're more likely to become a consistently profitable trader. So believe it or not, that's the short version of that rant. If you want to hear the full version, we're going to go into this a lot in the next, 2 weeks. We're hosting a brand new trader workshop. It's free. It's online. You can join live or you can catch the recording. I think it starts November 15th through the 18th. Matter of fact, let me do this. I'll just shoot you a shameless plug. It's a 1-minute video. Watch it, and then we'll hop into the charts when I'm done.
All right, guys, if you're into trading or learning how to trade or thinking about how to learn how to trade, I want to let you know that on the 15th of November, we're hosting a 4-day flagship online workshop called Ascension. It's going to be a radical growth catalyst for retail traders and investors, because you can join myself and the other guys at Tier 1 Trading for an innovative 4-day masterclass that will completely transform the way that you approach trading and investing. You're going to learn skills and strategies used by top elite traders and top technical analysts across a wide variety of markets, how to develop a plan so that you can perform with confidence and consistency. You're going to learn how to build and manage a trading portfolio that suits your lifestyle and how to expedite your learning curve and maximize the return on the time you invest. And most importantly, you'll learn how to achieve true financial independence so that you can say goodbye to all those chasing tweets and black box trading signals and all the rest of it. After all, you work hard for your money, so it's time to learn how to make your money work hard for you. Opportunities like this don't come around often, so don't wait. Sign up right now to attend our Ascension live trading workshop and get ready to take your trading to a whole new level. I'll see you there.
So last week was a slow week in the markets for me personally, mainly because of the amount of fundamental news events that came out. We had Australian news on Monday. We had, I think, FOMC on Wednesday, Bank of England on Thursday, non-farms on Friday. So I really basically decided to take the week off from trading, wait until all of the storming and crazy movement occurred, and then come back this week with a fresh perspective. And man, do we have a lot on the radar now that some of the dust has settled. And I'm not going to take you through everything, because I do like to keep this video to 20 minutes, and I've already ranted away about 10 of them, but I do want to give you a handful of different options. So simple patterns, advanced patterns, some structured plays, some trend continuation plays, to give you kind of an all-around sense of kind of the different styles that I personally trade and the different styles that we teach over at tier1trading.com. And we're going to start here on the pound dollar on the daily, and you can get an idea for how the day ended. The previous day we had a very high momentum bearish candle, this black one right here. And then on Friday, we really had, I like to look at this as a bullish candle. Now, if you spent any time with me, you know that I don't judge candles by the color. Yes, I understand that the open and the close matters, but when I look at bullish or bearish, I really think about the story that the candlestick gives me. And if you take a look at this recent candle, knowing that we have, or being able to see that we have this long tail or wick to the downside, it tells us the story that the sellers pushed the market down, right? They continued what they started on the previous day, but at some point they got rejected, they got defeated. And although price still closed lower than the open, we did so in the upper part of the candle. So I would look at the bears really losing that battle because they weren't able to really maintain the gains that they initially did. And you combine that with some structure analysis as well. Look left, structure leaves clues. And this is a prime area for a potential reversal in the market here down at a previous level of structure support. I don't have my NinjaTrader charts up right now, but I bet if I load one up, I bet we're gonna have a big juicy VS1 level down there as well. Boom, look at that, right in that level. But back to the trading view charts, if we go down to a 4-hour time frame, you're going to see another pattern forming as well. And again, I want you to keep the perspective of what we initially looked at on the higher time frame too, right? That identify, predict. We're identifying where price action is, what has happened. We're kind of starting to build a case, a prediction for what we expect to happen in the market. And then as we go down to the lower time frames, we're looking to confirm that. And we've got a partial head and shoulders bottom forming as well here. I'll draw this out really quickly. Price action comes down, we reverse up, we spike down, we reverse up right here. This is going to be called the left shoulder. This is going to be called the head. If we get something like that, right, a symmetrical right shoulder, and then we end up violating this previous level of structure resistance, that's going to give us a confirmed head and shoulders pattern. That is a classic reversal pattern in the market. So what we're doing is we're teaming a classic reversal pattern at a place in the market where we would be looking for a reversal, and bada boom, bada bing, you got a trading opportunity that you should lock in on. Oh, I guess I left out where we should think price is going to go. If we can form this head and shoulders and push up, I would expect price to retest this level of inside structure here at a minimum, at a maximum for me, this outside level of structure right here. Sorry, I'm used to the live room where by now they pretty much know exactly where I'm looking at whenever I look for targets and stops and all that fun stuff. All right, to the next pair. Next, we're going to be on the pound yen. This is a pair we looked at over the last 3 weeks. This is why it's important that you tune into this video each and every week. And an easy way to do that is make sure you're subscribed and make sure that notification bell is hit. But we have higher time frame on the weekly of still a potential head and shoulders pattern. We're still working on moving from the head back down to the neckline, which is down here on the weekly. In the meantime, we had a descending triangle which broke out, and our prediction is that we would come to this previous level of inside structure support, this level as well. And if we go down to the 4-hour once again, you're going to see that after the descending triangle broke out, we get a nice beautiful retracement back here, secondary chance to get involved, and now we're putting in this falling wedge or falling channel. And we can tag team that. We're going to have divergence here. Let's go down to an hourly, get a clear picture. We're going to team that with a little bit of RSI divergence as well. So you can see price action is putting in still lower lows and lower highs. Our RSI, our indicator, is doing the opposite. We're putting in higher lows and higher highs. This is called divergence, when your indicator or oscillator and your price movement are doing opposite things. And this is another classic pattern in the market. This is a pattern where you typically look for a period of relief, meaning it shows signs of loss of momentum, the move running out of steam. And again, we want to team that with the where we're at as far as price action goes as well. Now, the one thing to be a little bit not concerned but aware of with this, this did happen at the end of the week. Again, Bank of England was on Thursday. Non-farms was on Friday, which doesn't affect this pair as much. So this is kind of like the trickling aftermath of a high impact news event on a Thursday, and then the market not really carrying on Friday. So it'll be interesting to see what happens, not necessarily on the open, but after London gets their hands on this to start on Monday, to see if this is indeed going to give us that classic reversal, or if this is kind of just, you know, the market being bored to end the week. Regardless, I do think it's something that should be on your radar. It is on my radar for the week to come, and I think it's a decent trading opportunity as well, which I guess would be obvious if it's on my radar. All right, next up is the Euro Canada here on the daily. It's going to look like a bunch of junk, but these lines on the chart are important, these red lines. They're going to show a previous level of structure, so a zone that we are watching and consolidation in that zone as we're bracketed between previous structure support and previous structure support that was now broken is acting as resistance. And if you've been following the video for any time or following me by any time now, you know that consolidation could look sloppy and choppy and ugly and could be really bad depending on what type of trader you are. It can also hide a lot of hidden gems in the form of advanced patterns. And last week we had a nice advanced pattern formation down here. You can see this bat pattern. I'll go down to the hourly to make it a little clearer for you. Do X to A to B, B to C, C to D. Boom, ran all the way across the channel. We go back up to the 4 hour. We have another one forming as well. Not a bat this time, but a Gartley. And the difference between a Gartley and a bat is they're both M and W shaped patterns, meaning that they look like M's or W's, the shape. So like a, oh, that's the wrong tool. This would be an example of M, shoop. This would be an example of a W, shoop. Add some wings onto them and you got your advanced pattern formations, right? But the difference is in the Fibonacci ratios that are hit and the order in which they are hit, and that's going to determine which pattern we're looking at. So in this previous one where we just hit a lower Fibonacci, a 50%, which actually isn't a Fibonacci number, but it is a psychological number, that's going to put us on alert for a bat pattern. This one you can see comes up and hits the 618, excuse me, right here before we're tracing, which is going to put us on alert for a Gartley. So we're going to end up looking for something that looks like this: X to A to B right in here, B to C with this first retracement, and then a very deep CD completion right here. So this is what I would call a deep Gartley, and it's deep because our kill zone is going to be from the D completion to the top of the X leg, which is very, very small. We know that stops need to be right above that level at an ATR or a Fibonacci inversion level, depending on what your rules are. But the stops aren't going to be that big at all, probably something like this. And that's going to open us up for a pretty decent risk reward in comparison to what we usually get with Gartleys. Usually, we're lucky if we get a 1-to-1. Some of the shallow ones will give us an inverse one. This one's going to give us a pretty significant one just because that entry is so deep into that zone, which is also why it's on my radar to share with you guys this week. Next, we're heading over to the Pound Canada. This is another kind of price action candlestick type of trade, right? Again, this is why it's important to look left, I guess would be the lesson on this one, right? Because if we just look slightly left, or I guess the purpose of looking left and using higher time frames, if we look slightly left, it looks like a big breakout, right? Big high momentum bearish candle again, Bank of England, Thursday, no surprise. Broke through that line and we're thinking breakout, breakout, breakout. But a few things. One, if you're familiar with candlestick recognition, you know that this candle, as we spoke about earlier, although it doesn't close as high, is still a negative sign, right? This is more doji-like as it's close to the middle, but you can see the long wick on the downside shows us that price pushed down to that level and was rejected. As my mentor always taught me, look left, structure leaves clues. Whenever I see something like this, or even before we get to that, I want to look left and see where we're at. And you can see that although we broke this current level of structure, we're not out the clear as far as other levels of structure. We have some underlapping levels right here that we did not violate. And then of course this little guy, this little big guy over here that we need to pay attention to as well. Now what's interesting about this, and we don't talk about this a lot here because I don't like teaching things until I feel like I've mastered them. But something I've been paying attention to the last couple of years are volumes and whatnot and stuff like that. And it's interesting to see that on this breakout candle, right, we're not really seeing any significant changes in volume. In fact, we're seeing a lower volume than the previous candle, which had a much smaller range. And typically that's not a positive sign for a continued move here. So again, nothing that I can take into account in my trading right now because it's not a part of my plan, but something that I've been observing for the last year or so and certainly digging into more right now as I just got that new book and hopefully I can kind of make a final decision on whether it's something I want to use or not use in my trading for the end of the year to start next year. But I thought it was an interesting observation and I like sharing this stuff with you. I'm an open book if you guys are new. It's not, hey, trading guru, trading master. I'm still on my journey as well. I'm always looking to learn, always looking to grow. And just like the Trading Coach podcast, I want to give you guys kind of a hands-on look at that development. That way you can kind of be like, oh, Akil started here and this is where he ended up. Maybe I can do something similar. So keep an eye out for a reversal here. Let's go back to the lower time frame again. This could be very similar to the pound yen, I think it was, with the head and shoulders, as we're starting to put in kind of this classic reversal pattern like that, and can look for a potential move higher. Look at that. Here on the hourly, much better look at it. Should have just went one more time frame down, Akil. Much better look at it here on the hourly, on how we're kind of halfway through this setup. So before you leave, if you want to lend your opinion on the art versus science conversation that we had earlier in the video, feel free to do so in the comment section below. I do read each and every one of them. A lot of traders do as well, and there's some pretty good conversations that happen there. I'd love to get your opinion. If there's something that kind of sparks an idea, I'll do a follow-up episode either here on the Weekend Trading Edge or in one of my Trading Coach podcast episodes, and it may even give us some questions to address in the upcoming workshop. So leave it below, hit that like button before you leave, and until next time, plan your trade, trade your plan. Wishing you guys the best in the market this week.